If you start writing big checks out of the gate, you're probably going to make stupid bets, which is what I did.
Travis Jameson has been through chaos. Collapsed markets, predatory roll-ups, and the unforgiving world of business where one wrong move can erase everything.
These e-commerce businesses are really hard and really messy. They can't be centralized. You need expertise. You need people obsessing over every little product, and they all collapsed. I want to build this passive portfolio of like awesome small businesses that generate a lot of money. There's not much to it, and Capital Pad is a way to just leverage that, essentially.
But behind that calm exterior is a man who still plays the game like everything's on the line, because in his world, it always is.
You only have to get rich once. After that, you just have to not mess it up. We were talking about the bootstrapping thing and how, founders who kind of bootstrap first, then kind of get their real world, chops underneath them, and then go on to like raise money. It's different. Now we're talking about the Amazon aggregator mess fiasco, kind of like, I guess Thrasio was at the helm, and it was essentially spreadsheet jockeys. It was a bunch of guys, and I actually mean mostly guys, that raised a bunch of money because they saw, wow, these Amazon businesses are trading at 2.5x, 3x multiples. We can buy a bunch of them, centralize operations, go public at like a 15x multiple, and we'll just all be rich, right? And it looks so good on paper until you actually figure out, oh, these e-commerce businesses are really hard and really messy. They can't be centralized. You need expertise. You need people obsessing over every little product, and it's really hard to do that from like the perch up above looking down. And they all collapsed in spectacular fashion. Like billions and billions and billions were erased. I think it was this had to start pre-COVID. I'm not exactly sure when it definitely started pre-COVID, and they just raised tons of money. And Amazon businesses were being bought within 5 days, 3 days, 1 week. I'm talking about like $3 million businesses because there were so many of these aggregators. It's all, we could all do it. And they all got their ass handed to them at the end. I think there maybe like one or two kind of came out okay, but for the most part, it was a disaster. But because they're looking at spreadsheets and not like how messy these businesses actually are inside, they take chops.
Were they just buying up companies in similar niches, or was it like totally random? Like, hey, if it's an Amazon business that's doing 2 million, like we'll buy it. Like, what was it?
I think Amazon was the niche to them.
Ooh.
And there are a lot of similarities, right? All using the Amazon platform. It's the same ways of ranking and stuff like that. It's I don't know. Like, I honestly think with Amazon, you need somebody obsessing over the products, and not just like the products are obviously vitally important, but also Amazon it's just like a fancy search engine in a lot of ways. And so you need someone obsessing over like the search engine results and the ad costs and stuff like that. And when you're spreading that over like 20, 30 brands, it just gets diluted, and you can't do that. And I don't think it really works.
That's like saying my niche is Google. Like, let me just buy up all these companies that'll pop up on Google, and let me make sure that's insane. But what you were just saying was the difference between someone that comes from the operating mindset and someone that comes from the more, they say finance, not finance, finance background, where they're looking at it over the spreadsheet. It's very interesting because I was having a conversation with uh, a couple guys named Kurt and Kevin who run a firm out of San Francisco, and they buy, surprisingly, out of San Francisco, buy America First manufacturing plants here in the U.S., which is not what you'd expect from San Francisco. But they were basically saying that a lot of the traditional finance guys don't realize that when it comes to a lot of these blue collar jobs, blue collar businesses, home service businesses, manufacturing, they don't take into account all the people aspect of it. And when you're dealing with people, you're dealing with like almost a heart aspect, if you will. And they're not able to do that. And we had a pretty interesting convo on how, for the first time now with AI, you have the ability to almost build relationships and with people at scale in blue collar businesses that before you couldn't. And it's just, it wasn't necessary. It was possible, but they'd have to come from that operator background. But now you can kind of take that into account. I saw some pretty cool guys that would put together some automations on reminding you of people's birthdays or reminding you of people's anniversaries, etc. But I'd be interested to hear your thoughts on that, with the difference between these people-based businesses versus like a software company, for example?
There's a lot of directions you can go with that, and I'll just kinda start rambling, we see where we end up. Stop me at any time. Uh, what you know, the example you were given, these, like, finance people coming down to blue collar work, that's what we do a lot of, and there's a lot of advantages to that, and there are some disadvantages to that. To go to the advantages, let's think of, like, the typical blue collar business. Maybe it's plumbing, HVAC is the hotness right now, all of that stuff. A lot of times they were started by a technician who really knew the industry and the niche. They're a great plumber, and so they start building this up, and slowly but surely over the years, over 20, 30 years, they built a really sizable company, worth, we'll say, 5, 10 million bucks, something like that. When they go to exit, the company is not the same as they started, and that has some advantages for the buyer. So if someone's a really good plumber, a really good mechanic, the chances of them also being really good manager and, like, finance person, all this, it's not probably not the case, right? And so at that point, if someone from, like, a finance or whatever background comes and buys that, uh there can honestly be a lot of opportunity there, because they're no longer needing that technician. They're just needing a manager, someone who understands, like, the bigger picture stuff. So there clearly are advantages to that. We've seen it play out multiple times where this is really good. Now, with that said, um, pure spreadsheet jockeys, that doesn't sound very nice, but it's true. Yeah, they, they probably have more of a harder time because there is still that people element. So it's kind of a double-edged sword. Again, we go into deals, and after purchase, we're like, "Oh my gosh, this previous owner had no idea about marketing. They're using these terrible agencies, like, their, like, inventory's all a mess. They didn't even know how much they had," that type of thing. But on the other end, like, they're probably more blue collar people themselves, and so they know how to relate a little better. So it's a fine balance. There's pluses and minuses to it.
Definitely. I'd love to hear, like, because obviously you came from, the bootstrap side and the marketing side. So how, like, when you're going in now, you obviously specialize in these boring businesses and blue collar companies. How are you able to use, like, that digital marketing and just that bootstrapping foundation to, like, create value in these companies that are more traditional and more blue collar, I guess?
Yeah, I'll start by saying that for the deals that we're picking, I think we have a system that works really well, and it's that my partner and I both have to completely sign off on it, and we come from completely polar opposite backgrounds. I'm, like, bootstrapped in the trenches, small business, marketing, finding all these little hacks and stuff to get around, and he's, like, traditional finance, private equity, big fund, principal there. So he knows high finance, I know real world stuff, and if we both sign off on something, it's a good sign, right? Um, and so when we're hopping in and, like, adding value to these out of the gate, a lot of this is just you'd be surprised how many of these companies don't do marketing, or if they do, like, so the deal we did, not the last one, the one before that, I went in and was, like, looking at their agency, and we had to actively tell them to stop because they were doing more harm than good. They didn't know that, but they were just that bad, and the business was built on marketing. Like, that's how they're getting the word of mouth, is, like, their SEO, their Google Ads and stuff like that, and so we can come in and really quickly just say, like, turn it around. We've saved them thousands of bucks a month and then, like, ramped up and improved the business. So, um we love finding those situations to hop in.
Right, because it's an instant value add, so it's like where someone would look at the system who maybe is not specialized in the marketing side and be like, "Oh, this is a mess." For you, it's an opportunity. It's like, "Okay, wow, I can come in, I can tweak this, and then instantly add value." That's really cool. It's really fascinating that you've found that balance between you on one side and then someone else in private equity. How did you meet your partner?
Uh, a good friend of ours, Taylor Pearson is his name. He's worth a follow online. Uh, he used to host once a year. He would just get together maybe 10 or 12 people that he found interesting and liked, and just bring them to a lake house. And we're just going to spend the weekend. And you didn't know anyone else really. And so I met him that way. And we kept in touch over the years. And then slowly but surely, like, he was transitioning to something new. He was becoming an independent sponsor. And we're talking. And I was like, doing this capital pad thing. And it really aligned with him. And so we just took off together, and I'm so glad. I couldn't have done it without him, or I would have, but I would have embarrassed myself way more without him.
I'm curious, with what you're building with Capital Pad, why did you decide to go the route of offering it and opening it up to people, the deals, versus you taking them on and only acquiring businesses yourself and almost keeping that lower profile and just doing it that way. Because I'm always curious, there's people that we'll talk to. For example, yesterday we had a conversation. Uh, does acquisitions for hotels and he used to work at Goldman Sachs, etc. Like pretty cool guy, and he's one of those straight finance guys. And he said that there are advantages to keeping a much lower profile and keeping everything under a veil of secrecy, if you will. So I'd be interested to hear what do you see that maybe they don't?
All right. So when it comes to the question of like, why didn't we just acquire these ourselves? Um, to rewind, after I had a few exits from some of my companies and kind of became, a capital allocator and investor in different things. And in all the different asset classes I was in, which was most of them, I kept coming back to actually my roots, like the small business landscape. I'm like, these are I think you get the best returns from small businesses. Definitely best risk adjusted returns. But there's some problems with them. Like, one, how do you passively own a small business? Like, I don't know, maybe you can buy one and put in some management. That's really hard. It's way harder than it sounds like in theory. It's pretty impossible. So there's that. How can you diversify between small businesses? But it was a tough question. But I wanted to have the upside of small business without the downside. I want to have my cake and eat it too. And so kind of stumbled into this like SMB acquisition space. This is like search funds and independent sponsors and stuff like that. Um, and that's where I found that I can actually have my cake and eat it too. I can become a passive investor, get all the returns of small business, actually better returns because they give you investor perks without having to do the operations, and I can diversify between lots of them. So that was the first part, and so I never was interested in acquiring the whole businesses myself because I didn't want to mess with it. I didn't want to run these. I've done that. I've founded about a dozen companies, and I bought a couple along the way. And I'm a better builder than I am owner. Like it's not my skill set. I want to be like passive with that. Um, and so as I kind of got into the space, discovered pretty quickly that it's really hard to get good deal flow in the space. And it's also kind of was getting difficult to diversify between them. And I thought I can actually create a platform to solve that. And so that's what we did with Capital Pad. I've invested in every deal we've done, invest pretty heavily, but I can't take down the whole checks. I only have so much capital that I can put forward. And because of our size advantage now, we're able to get a lot better deal flow. People know us and come to us instead of me having to, scrape to get anything I can. And with these deals, a lot of it's a numbers game. You want to say no to 49 deals before you find the 50th and say yes to. It's hard to do that solo, but creating the platform kind of opened that up. But again, so I'm still building my dream portfolio of I want to own like 30 small businesses. I don't want to operate them. I want to own a chunk of 30 small businesses. I want other people to operate those for me and me get the returns of that and the diversification of that. And now with Capital Pad, I'm essentially just getting like you know, other people's money leveraging my investments on top of that because I get to carry from anything they make. So, and they get the access that I've built up. So it's just like a win-win for everybody.
I'd love to dig into the strategy because it's so interesting. There's the people like the guy we talked to yesterday who's super specialized in one vertical, which is like they just buy hotels. Well, they also buy debt on hotels, and then they just focus in hotels. And then there's other people who are doing roll-ups and say HVAC or whatever and buying a bunch of EBITDA, bolting it together, and then, looking for a big exit. But it sounds like with this model, are you industry agnostic with this model? And it's like any good deal that comes across your plate due to the fact that you don't have to get involved in the operations, like you're open to all, or do you have like specializations as well?
So I firmly believe you only have to get rich once. After that, you just have to not mess it up. And how do you mess up being rich? Like debt and concentration. And so those are the things these deals use debt. Like that's standard in M&A. But I'm not personally guaranteeing any of it, and it's diversified between all of them. But the bigger thing is concentration. I purposely don't want to be all concentrated in just hotels. And to be very clear, the if you concentrate and operate all of those, like, you can make a much bigger total return if that's your thing. Yeah, because 'cause you're gonna, get multiple expansion. You can do some really cool stuff, but that's not what I'm after. I'm after, like, a diversified passive portfolio that's hard to kill, and so I think, this magic number that I just, like, made up, but, like, having 30 small businesses in different industries across the country, like, they're not related at all, that's pretty bulletproof, right? It's the equivalent of kind of like, an S&P 500 index fund. It's very diversified, no one company, except instead of paying a 20 price to earnings multiple, you're paying a 3 price to earnings multiple. And there's no liquidity, but like you're also getting like, cash flow distributions for probably about half of these companies and stuff like that. So
Um,
that's kind of how I built the portfolio.
That makes sense. It's like you basically reverse engineered the lifestyle that you wanted, or reverse engineered exactly what you wanted, and that's it's because it's obviously we're doing our research, and I know I saw that you made some cash and then went and lived off in, what was it, Thailand for a bit, and you like, so it's clear you value lifestyle. So it's interesting you reverse engineered and picked the path on how to allocate your capital across multiple, but keeping it fairly passive. How do you, I guess, what are the active parts of the business? Is it the deal origination itself, or is it you building a brand to get people to know about you, or what are the active parts left of the passive of the portfolio?
So I would actually separate that. Capital Pad, I am very active in right now, every day. But the deals themselves that we've executed, there's not much. And then so that's a very big separation. So like the the deal I mentioned with like the really bad marketing agency, I'm pretty hands on with that right now. We closed, I don't know, a couple months ago, and I'm being really hands on, like helping them just kind of accelerate stuff. Like I'm changing their hosting for them, just things that are in my wheelhouse. But most of the deals we've done, like I don't know, I get a quarterly update, and that's kind of it. Quarterly update with financials, and occasionally like a distribution comes through. So there's not much to it. Now for Capital Pad itself as a business, yeah, I mean I'm having like multiple calls today with different, searchers with deals, investor call later. Um, Getting the deal flow is the hard part, getting the word out is the hard part, and it's compounding. More and more people are learning about us, we're getting better deals, but, again, we're having to look at so many, again, we wanna look at 49 deals to say yes in the 50th. Uh, there's a lot that goes into that, and then once we get the deals ready, we've gotta, like, you know, go through it, the really in-depth, all of the details of the deal, launch it, get the people, spin up the SPVs. There's a lot that goes into it back there, but uh, that's the fun part too, though.
I've got a couple of follow-up questions from that. One, I wanna go kind of into the deal origination strategy, but before I do that, I would love to, like, hear how you kind of landed on this model. Like, it sounds like such an interesting model and such a, I guess, de-risked model, and it sounds like the perfect model for yourself, but clearly you've gone through, you mentioned you were in just about every asset class you can imagine, you've bootstrapped companies. What's kinda like the decision-making tree that kind of led you to where you're at?
Does that mean is your question around the deals I invest in or like the capital back?
The capital pad model, like, you don't have to go through your entire story in every business you've ever built, but just I'm curious, like, how you landed after being in so many different investment vehicles or you just asset classes and building businesses from scratch. Like, how did you land on this model and what were some epiphanies that kinda led you here?
Uh, I probably originally was influenced by the angel list model. The platform itself of, it's like the place that these deals happen. So that was,
That's Naval, right?
yes, the balls. And I've done a bunch of deals, probably done like, I don't know, 35 deals through Angel List over the years. I'm not very active in venture anymore, because I think I found something better. But, yeah, so it's a great platform. They've done really well. That was half of it. The other half was after I got into kind of the SMB space, I realized how difficult it was for, like, the average investor, including myself. So with venture, people can understand it a little bit more. Um, it's essentially like, here's this idea, and you're gonna give them some money and hope they can execute on it, and one day you get your money back, hopefully, but probably you're gonna lose it, right? And everyone understands that. It's not a secret. People know they're gonna lose most of those bets, hopefully. But with these SMBs, there's a because it's basically just lower middle market as M&A. There's a lot more that goes into it to where what I call normies, non-finance people might not understand some of this, and there's a lot of like landmines to watch out for. You think, oh, well, I just go and like buy this small business. No, there's a lot that goes into it. You kind of got to watch out for, and so the model kind of made sense. Like Capital Pad's model, like their main value add is curation and handling it, all the stuff, but like curation. Because I don't think if somebody's not like deep in the space, they're probably not going to understand it, and they're probably going to get bad deals on average. Which I made a couple not great deals at first too, and I have all this real world business experience, and I still like didn't know what I was doing. So I think that's our main advantage. And the last thing is why we're not a fund. Um, I think with a fund, one, you kind of have to like force investment sometimes. Like you have to, you know, use the funds in the fund within a certain amount of time. Maybe we find good deals, maybe we don't. But also, I kind of like the freedom aspect of it. So we're just a deal by deal SPV platform. So to me, there's a little bit more mental freedom in something like that. Like if we want to do a deal, we do. If we don't, we wait, and we can just wait and hang out the rest of the time.
Right, and you don't have, like, you can think longer term, like, the guy we were talking to yesterday, it's a family office, so he was saying something similar. We're asking him the major differences between a fund and then a family office, and he's just like, as you mentioned, there's no timeline to, because it's like you're obviously going to, I would say, if you have a timeline to allocate the capital, you're not gonna necessarily get into the absolute best deals that you could possibly get into just due to the fact that there's a ticking clock, so you have to allocate the capital. So I just find that really, really interesting. And then are you guys, so it sounds like you guys are buying and then, like, holding these companies, and it's not really like a flip situation, or are there? You have complete optionality and you're doing whatever.
I think there's a very important thing to talk about here that is probably not clear to everyone. We ourselves are not buying these companies. We are backing what they call searchers or sponsors that are. And so it's essentially a individual or a small team have identified the companies to buy. And we'll give you like the nomenclature, the details. There's searchers. You think like search funds. That's the term. A lot of these are self-funded searchers. There's all kinds of like weird vocabulary around it. Don't worry about it. Essentially, it's a business probably 7 million and below in enterprise value. So you can think maybe it's making $1 million a year, $1.5 million, something like that. They go and buy that using probably an SBA loan, so maybe like 80% SBA debt, and then they raise the last 20% from investors like us. And post close, they're probably going to become CEO, right? The plumbing business, the plumber's retiring after 30 years. They're buying it. Here's the check, Mr. Plumber. We're going to come in and run it. And they need investors to help close that deal. So there's a lot of advantages to that. The SBA gives some really sweet terms. You can pay cash distributions along the line as long as you're making your debt payments. The SBA lenders themselves, like the banks, they're setting a little bit of a bar that you have to cross to get over. So the people have some pretty good diligence for us to look at out of the gate. And that's kind of how it goes. Once that transaction closes, the searcher, as we call them, they become CEO. They get a salary, nothing crazy. Think 100,000 a year, and then all the rest of that money either goes to paying down the debt or paying back the investors. Investors get their money back first, plus a preferred return. Preferred return usually 8 to 15%. And then after they pay off that preferred return and return the capital, then the investors convert to common at like a multiple, and then they share equally. So investors get really sweet perks. The searchers are very, very motivated to give investors their money back. So a lot of times these deals, investors might get 100% of their invested capital back plus the preferred return within like 3 years, 4 years. So like that's really nice, right? And then
Yeah.
it's, I don't want to say house money because I think it's a bad analogy, but you get the idea. Now you're just a passive shareholder getting your distribution.
So so in a sense, you're ultimately betting on not only the business, but you're also betting on the searcher and the person who's gonna step in as CEO. I would love you to dig into that, Ivan. I know you probably got some, I keep firing off these follow-up questions, but, like, so how are you evaluating with Capital Pad? Not because you're curating these businesses, you're doing basically the deal sourcing and bringing the businesses to the searchers, if I'm correct, and then
They have the
they're bringing the
deals.
deals to you.
It's
Oh,
really
okay.
hard to find good deals. Like
Gotcha.
we we could have a whole team, and I don't know if we'd find enough to do it. It needs to be distributed, and, like, decentralized to get good stuff, in my opinion.
Gotcha. So you're gonna be vetting. Go ahead, Ivan.
No, I was just gonna say it's so interesting, how it's been very interesting that the one thing that everyone has a different business model that I've spoken to for the most part. Everyone has a different risk tolerance, gets investments from different places, has a general has have different feelings around how involved they want to be in the business. Some guys want to operate it and run it to the ground, not to the ground, but to the sky, to the sky. Yeah, they want to they or some guys want to be completely passive with it. But the one thing that is in common is the actual deal flow and the deal origination. Why do you think that is, and what have you guys tried in order to solve that problem?
In this case, like, the what I will call the entrepreneurship through acquisition model has really gained steam the last few years. So there are a lot of people out there searching for these companies to buy. And so to be a searcher themselves, it's probably harder than ever. From the investor point of view, it's basically the same. You know, the deals are going to get done. We just have to find the people doing the deals. And so they have to know about us. So there's probably not as much to it. From them, they've just got to, the searchers have to find the deals.
So you did, so the searcher, just because I want to just clarify even further, the searchers actually come into you with the deal and themselves, and then you're then making bets on both the searcher and the deal. So let's talk about like betting on the searcher. How are you vetting these people, and what are some, I guess you could say, like traits or qualities of like a really good, someone that you're willing to put your money into?
Before I answer that, I did want to cover the last bit because there's like two profiles of people that we bet on. There's the searchers, which we went over, and then there's the independent sponsors, and they're very similar. It's both, entrepreneurship through acquisition, but the economics are a little different, and the company size and the profile of the person is different. So about half our deals are searchers, search funds, plumbers, right? And the other half are these deals. They're quite a bit bigger. So the one we're just closing on, this week, is like a $30 million enterprise value deal. And we're putting in about $1 million for that. It's almost always former private equity guys who have left their funds because, a lot of private equity funds, the economics aren't really there right now. They deployed in 2021, they're all underwater. So these talented people are going out on their own to do these one-off deals. These independent sponsors know how to put larger deals together, and the companies that they're buying have established management teams in place. Again, you have a $30 million business. The CEO isn't the only one running the show, which with these searcher businesses, that could be the case where they have to take over the CEO. In these situations, independent sponsors aren't. So it's a little bit different. And the economics are slightly different too. They're actually probably better for investors, the economics. Debt's a little more expensive. You can't make as many distributions, but investors get more of the upside as that works. So those are the two profiles.
Right.
And what was the question? Sorry.
Yeah, no, and just to dig into that as well, like, so to my understanding, it's also a safer investment because obviously due to the larger size of the business, that's where you get like the multiple arbitrage because due to the fact that the business is larger, it's more scarce, it has a better team, it's more proven. So it sounds like maybe like you said, the debt's more expensive, but it's a bit more de-risked. Maybe you could expand on that a bit.
I think I kind of agree with Howard Marks and how he looks at risk. It's like there's not a standard, something's not risky, there's just a bad price, right? And so these smaller businesses, a $5 million plumbing business, it might sell at like a 3x multiple, where the larger company, a $30 million business, you could see it like a 5 or a 6x multiple. We don't do too many 6x's, but that would be totally within the realm of normal. I think this one was like a 4.5x, which is really attractive, to be honest. Um, so yeah, the bigger you get, you pay for that more established business a little bit. I think for the most part, our deals, all from the investor point of view, all kind of pencil out about the same. We are looking at, we won't look at a deal unless it's a 30% IRR. modeled out. And this model isn't based like, we look at the models and people love just making up models. We don't really count growth into the models to reach our return targets. Maybe like, 5% a year in line with inflation, but we're more interested in, are these businesses hard to kill? What happens if it just does the same as it's done for the last 10 years or 5 years or something like, well, not 10 years, the last 5 years. If it stays in line with that, do we end up in a good spot? If that's the case, then we can like get behind it. And again, that's one of the reasons we don't do as many deals because we say no to a lot of stuff that's based on growth, which might work out just fine. It's just not really what we're looking for, and I don't think it's what our users are looking for either. They kind of want the no brainer, hard to kill stuff.
Yeah. And I know in previous podcasts you cover what makes a business hard to kill, especially with AI. It seems like absolutely everything is killable now. But that's why you're leaning more toward. Is that why you're leaning more towards the blue collar, plumbing, etc.?
Yeah, I think I've said this before, but there's like a couple different ways you can bet if you want to invest in AI. One is to pick the winners from AI, the manufacturers, the huge tech companies, the companies that can lay off half their staff or something like that. And the other is to invest in companies that AI doesn't really matter to, and that is these more like boring blue collar businesses and stuff like that. And of course, it'll matter some, customer acquisition and stuff like that, but it's less of like a major disruptor type of thing. And so there's other stuff that we look at when we're looking at what to avoid or what to look out for. And AI is just not really like the thing that we're looking at as much.
It's very cool. I what's been interesting to me across these conversations we've been having is that by normal standards, everyone's made it. Everyone makes a pretty good living in this space. Um, and I'm always interested to hear as to, obviously the game is fun in and of itself, but what is someone like Travis now building for in the future? What does this all go? Is there a play in the works that will eventually go towards? Is it a um for the love of the game, so to speak, or what is all of this building towards?
That's I like that question. That's a good one. So I think the first is, you said like all the people you're talking to have kind of like made it in like normal real world terms, and I completely agree. Um, the way we're building Capital Pad is not a way like a lot of fund managers make it when they have a giant fund, right? The management fees pay for all that, and they get to carry when it works out. At Capital Pad, we're not taking management fees. Like we're really kind of just riding Buffett's coattails from his early partnership. Um, we get paid when deals do well, and if not, we don't. And we're fronting a lot of the cost up front for that stuff. So we take a 20% carry, but no management fee at all. So it's definitely like a bet on the long term with that. And again, these deals, our carry doesn't kick in for years, so it's very much a long term play with that. Uh, what my personal goals are, well, again, as I said earlier, you only have to get rich once, and I've made enough through my entrepreneurial career that preservation is pretty important to me. Um, and so when I look at what I'm trying to accomplish, it's really just what we talked about earlier. I want to build this passive portfolio of like awesome small businesses that generate a lot of money. Like there's not much to it, and Capital Pad is a way to just leverage that essentially. I don't have some grand lofty goals of like hitting some magic number or doing something interesting. Like I don't know, I already live a pretty good life. I want to keep that going. I like small businesses. I like businesses that I can have an impact in and understand. I like things that are less speculative. Again, so I've made like 50 venture bets in my career. I've done plenty, but I don't really do it anymore. It just wasn't really my thing, and the payoff, both financial and mental, wasn't there as much for me. Like a company that I don't know gets acquired. Cool, here's the check. Where with these, like I'm much more involved in it, and it makes sense. And also, I just like small business people. I don't know, kind of like salt of the earth people, you could say. Um, I like dealing with them more. It's more sensible. It's more sane.
Yeah, that's it's I like the idea of the the preservation, so to speak. And Do you have you have a family? I assume you have kids. Is that a not kids yet on yet is the key word, and that's what I've found. And DJ and I don't have kids yet either. We're not married yet either, but but the reason I ask that is because that's another common thread that I've seen is a motivation, I guess the why, so to speak, to I guess kind of get into softer language, if you will. But we're talking hard returns, and now I'm talking about this stuff. But the uh, what I find is that the bigger that these guys get, and the more advanced they go in business, the less it becomes about the actual business, and the more that they talk about the family side of things, or their the mental side of things, or their spiritual side of things, if they're into that, or if they're have you seen a similar pattern with yourself at all, or
Um, I have to be honest, I really like playing the game. The game is really fun to me, and that's just the game of business. And so even like Capital Pad is my main thing, I still have other companies that I've founded that I'm still, we have management teams in place. I still like getting in there and getting my hands dirty and stuff like that. Uh, I like playing the game of building, and so it's a lot of fun to me. I mean, all the other stuff is really important, providing for my family long term, not making them question what we can do, having safety nets for everybody. That's really, really, really important to me. But I'm a builder, and I like that, and I have to be obsessive over something. So, my wife and I have talked about, like, what would it look like if I retired? Which I won't do. I don't think I'll ever retire completely, but I would have to find something else that I could completely obsess over to replace business. And that's a hard thing to do because I actually think, like, business is the best strategy game in the world. It's kinda like the most fun thing to say or to play. Now, yeah, 50% of it's kind of annoying, admin stuff and taxes, all that stuff's kind of annoying, but, like, the main parts of it is, like, I'll play that over chess any day. It's a more fun game to me. So, yeah, I just wanna keep playing. There's, like, the infinite versus finite games, right? You wanna Some people are playing the finite game to just, like, get a bunch of money and keep going, like, I wanna play the infinite game so I can just
that's pretty cool. And there's no right answer, is what I'm learning. Is that everyone has their individual reasons for why they're doing what they're doing, and I think that's really cool. With the, I find I'm the same way, or I'm starting to learn that. Like I need to have something that the obsession needs to dig into, the obsession needs to be channeled towards. How did you? What's the story behind you learning about that? I'd be curious. What's the story about you? I mean, I think it's kind of obvious once you type into business and you realize you're obsessed that you don't want to ever stop. But I'm always just curious what that is.
I was kind of obsessed with self-improvement a little bit. Um, pro I don't think in a weird way, maybe others would disagree with me. Um, and it was funny, I grew up without no real exposure to entrepreneurs, but I built my first company, which is very tiny, very, very tiny, and, just happened to, like, get plugged into a network of other entrepreneurs, and my mind was blown to find out that, like, 90% of the others entrepreneurs I'm hanging out with are exactly the same. They're obsessive over that, and whether that can be from, like, longevity and fitness protocols to, like, brain hacking. Like, I was into, like, brain supplements, I don't know, like, how old am I? 40, like 25 years ago, before it was a thing. And I was like, I'm the only one. But no, this whole big crew of people were also into that. So I kind of just like fell into it and discovered like everyone else was the same. I don't remember your question. I'm gonna be honest.
No, you're good.
No worries. I what I would love to dive into is I would love to see, like, from your perspective, what does your day-to-day look like now in juxtaposition to as an operator, as a bootstrapper, as, being super in the weeds of the business? Like, how do you? Because what I've found is when speaking with these guys that are more on the investor side, like, productivity just looks so different for them, and a lot like, it's just a very different world, and, like, how do you structure your days, and how do you kind of, like, how do you define productivity, like, now on the investor side versus, like, as a founder where you were probably running around wearing 50 different hats?
It's probably not as different as you would think. I'm actually pulling up my calendar so I can give you a real answer instead of just like a bullcrap one. So I still consider deep work very, very important, because although most of my time is spent as an investor, I'm still more of a founder at heart. Those two just kind of cross over now. And so I like building systems. So with Capital Pad, if I'm not building systems to improve it as a system instead of just the Travis show, then I think I'm failing. And so like I spend deep work time that I just completely block off of my calendar for like, a couple different mornings a week. Like it's all deep work. It's all I do. And then separate times of the day is just admin work where I get to my inbox. And my inbox is pretty scary, to be honest. It sucks. Um, then I look, I've got several different calls with people essentially that have deals. Sometimes that's with investors have questions. A lot of times that's just with a searcher or independent sponsor. Like they put a deal together, they're raising money, you've got to go through it. Several of these. So I own several companies still, and so like it's calls with the management teams to go over it. People are kind of running those, but like the management team call is still very important to like align direction, to keep going. I'm really all over the place. Podcast interviews on the regular. Um, there's it's never the same. That's the big thing. It's never the same. I can't necessarily repeat what I do every day.
Right, right. I'd love to dig into that. So you obviously still have a few companies where you're involved with the management team that you founded, and then you're evaluating all these searchers and the people that you're going to invest in deals with. I asked this question earlier, but then we kind of got sidetracked. I'd love to like hear your perspective on how do you evaluate like either a CEO of one of your companies that you founded that you're now placing to run the business, or one of these deals where you're not only investing in the business, but you're investing in the person to go in and run that business. How do you think about, what are the traits that you look in a person to go run a company?
I'll start with man, I'm just riding his coattails all day. I'm right on Buffett's coattails again. And Buffett said something along the lines of when a company with a reputation for, I don't know, failure meets a manager with a reputation for excellence, it's the reputation of the company that maintains, which is a fancy way of saying like we think the business is more important than the searcher at first. They're both very important. They are. But you want to like hop on to good, easy businesses. As Buffett would say, you want a business that like, I don't know what he said, like a moron would run or something like that. Because eventually like you'll get one. And so we start with that. And the list of what we're going through is less about things that we're looking for and more about things that we're looking to avoid. And so I actually pulled up something that we wrote about it. So the things we're like while we pass on most deals, like cyclicality, maybe it's a very cyclical business, which is fine in its own respect. It's just not what we're looking to do if you're putting debt on something. Uh, Lack of developed infrastructure. Again, if it's like a team of like three people, that's not really a business. That's like a little hustle. The sophistication of the sponsor, like do they understand cash flow forecast, like working capital, stuff like that? No proper like value proposition. So one who said is like, can this company be disrupted with like $100,000 worth of SEO and a website? Um, if so, that's not something you want to invest in, right? You want to take the $100,000, build a website, do some good SEO, and recreate that versus buy something for 3 million bucks. Because some of these businesses, if you strip out everything, that's all that's really left. There's a concentration risk is a really big one. You can get around that sometimes if like certain industries, it's just kind of like baked into it, but for the most part, we don't have concentration risk. Valuation, again, like who said this? But like the magic is in the multiple. I didn't come up with that, but with these deals, the multiples just make it so it's harder to lose, and so that's what we're really looking at. For a business doing $1 million a year, we're not going to pay 6x. We're just not. Um, we'll pass on it. Maybe it works out fine, but it's not what we're looking for. Um, Non-standard economics, like too much leverage, and a lot of times, like just in industries too challenging. Like if we can't easily understand it, kind of get our heads behind it, just kind of put it in too hard pile and move on. So that's the main list of the stuff that we're kind of like looking out for, and they were just looking for what passes those sniff tests. And then of course we hop into the sponsor, the searcher, which I'm happy to talk about, obviously. But
Yeah, before we jump into that, I'd love to hear because you talk a lot about like businesses that are hard to kill and just like you're not even really factoring when you're modeling out like your returns. You're not even factoring in growth really, which I think is really fascinating and like a great way to invest. So how do you think about like because if we want to talk about Buffett, like just a moat, like when you're looking at a business, how are you thinking about like moats and what how would you define a business that's like hard to kill? It's probably a tough question. There's probably lots of answers for different industries, but like just that overall concept when you're looking at a company, like what screams at you like, hey, this is really, really hard to kill? Is it like brand or there's certain things that you can kind of pull and um
Well, as we kind of looking through the last few deals that we've done, one, I like companies that have been around for a long time. You'd be surprised. We've had several companies that have been around for over 50 years. Um, and that's a really great sign. They've made it through a lot of different cycles that way. And it doesn't mean that they're guaranteed for another 50 years, but it's a great start. Some of these, like I think the deal that we are completing this week, it's like I think like a high-end rehab center, but it's in the Midwest, and most rehab centers are in California or Florida for the most part, a little in Arizona, and so that geographically it gives it a little bit of a moat. Like if the executives and like high-end doctors and stuff like that with some sort of addiction problem, this is the place they're going to go if they're in the Midwest. If they want to be able to maybe still work sometimes or be close to their family. So there's a little bit of a moat just in that thing right now. Like there aren't any others in that area. That's the one if you want a nice one. Um, Another deal that we did, this one actually fell through unfortunately, but it was an amazing like 150-plus-year-old company with like the branding that was just magic. I can't say the company name, unfortunately. You guys would probably know it, but there's just not one thing. There's really just not one thing.
it's dependent on the deal,
Yeah,
sounds like.
yeah, they're all over the place.
Yeah, I'd be curious to. It sounds like Warren Buffett's your main virtual mentor. I don't know if you've met him or if you have any sort of relationship with him, but it sounds like Buffett's your main virtual mentor. Is there a mentor that you learned a lot of this from, or learn in general from right now, that isn't Warren Buffett?
Uh, I don't actually know that I've had a in-person mentor for stuff like that. I have some close friends that I look up to and learn from a lot that are very experienced, but not necessarily the mentor type thing. So,
Yeah,
I think the classic value investors are probably who I'm most aligned with. You know, I actually like Munger more than Buffett, but those guys, even though like I've never met them, I mean, I've been to the annual meeting a couple times when they were both still around. Uh, but I want to be clear, like what I'm doing is completely different than what they did, but I think fundamentally it's very, very similar. They're kind of going for like no brainers that are great companies that are kind of hard to kill. And like, so I think fundamentally that's kind of where I'm at. And I would actually maybe even argue that, well, if not argue, I can make the claim that if they were starting out today, they might be playing in these similar industries because like the value investing, uh, traditional value investors have had a hard time for a while on average. The market's so much more efficient, you could probably say. Like these easy cigar butts where, they're trading for less than their capital that they have sitting in the bank account. Like you don't really see those anymore. And if you do, it's probably a really terrible company. Where with, these, you can find companies trading at 3 or 4x that are pretty phenomenal. Now you pay for that. Like there's no free lunch. These companies there is still a risk. They're illiquid. Maybe you're getting quarterly distributions from some of them and not all of them. So you might have to sit on this for several years. Um, so there are issues with this. It's not the same, but it's kind of the boat that makes the most sense to me, and I think they would probably align with that.
interesting. That's I'd be curious to hear so far 2025 what the biggest paradigm shift business wise that you've had. The those moments where you get hit with a word or a quote or read something and you're just like, wow, I don't really know much about what I'm talking about here. Or if it ever makes you feel like, oh wow, I've been thinking about this completely the wrong way. Is there something like that that's happened so far this year? I'd be
I think
curious.
I think I've had two large realizations. Um, both of which made me very happy. One is with Capital Pad itself. Uh, we were the team at a little bit of a inflection point of like deciding where to go, and we built something pretty good. We've deployed a good amount of capital, like a lot of traction on the business. The company's looking great, and we're like, do we kind of go and make this big, right? We kind of grow this to the next level, maybe take some like do a proper venture round, make this like one of the fintech startups type thing. And I'm very happy with the realization that I don't think we need to do that, and we're not going to do that. That our quality of life is more important, um, and that I don't think it will. I actually think the company will do better not going that route over the long term. Keeping our burn relatively low and lean, because I think Capital Pad's one of those that it's not like there's 1 or 2 years to make this big. 10 years from now, it's gonna be way bigger than it is now. Not bigger, but better, than it is now. And even if it's not, even if we still do the same amount of deal cadence, a handful of deals a year, like, that's still a great win for us and our investors and the people raising capital. It's just a win-win all around. And so the kind of realization is, like, we don't have to do that craziness. We can just live a sensible, like, calm, quote unquote, company, and still have a really great outcome for all of us. Um, the other realization was actually, so I don't think we've talked about this, but I own a marketing agency, a search marketing agency. And if I look at all the companies I've built, that's the one I've had the most fun with and I would never sell because I'm a systems hacker, not like literally hacking stuff, but like I like finding systems and like figuring out how to beat the algorithms and just like overcome them. And so SEO has always been a great outlet for that. And it's been great, but SEO would kind of it lost some of its pizzazz the last few years in terms of excitement. It was still very, very valuable, and it's helped all my companies a lot, but wasn't as fun. But recently, with all the AI changes, we found a new algorithm to hack, and that is essentially how to get the things that we want to be recommended by the LLMs, the ChatGPTs and whatnot. And we've kind of like cracked the code on how to do that, and that's been a lot of fun, both for ourselves and our clients and whatnot. That
Work. I was actually because I know you come from an SEO background, I definitely wanted to bring that up, like, how I wanna dive into that exact topic of, like, how is SEO changing now that, ChatGPT and these LLMs are almost becoming, where people are searching for stuff, like, how is that it sounds like you guys have a hack, so I don't know how much you can share, it's probably internal IP, but I'd love you to just kinda jam on that.
No, we could talk about it fairly openly because it's really, really hard to duplicate. Like with old school SEO, people could kind of do it themselves. If you're in a really competitive industry, no, but you would kind of like you can optimize the site yourself. With this AI, we'll call it AI SEO. There's like GEO or AEO, AIO. There's different terms for it, but the people can't really do it themselves as easily. You have to almost have a established network as an SEO to make this happen. The first thing is that Google itself is not really disappearing. In fact, Google's search traffic is still increasing, which is kind of mind blowing. You'd expect it like everyone's using ChatGPT more, and they are, but it's not like it's replacing Google as much. Maybe a little bit with certain users, but Google's still going up. So traditional SEO is still insanely valuable and important. For a lot of industries. There's a handful of industries where it's just kind of been killed. Like if it's a pure informational play, think recipes or like stuff like that. Like you couldn't pay me to be in that. That's it's a really bad spot to be. But for actual businesses, SEO is still great. So with that, you look at how will ChatGPT, well, I'm just going to use ChatGPT as the example. How will it display your product? Um, And so what we found is they're essentially using almost like the Google search results. Now they have other information like database, not database, other sites that they're getting information from, but a lot of this stuff is just coming from Google search results. So let's say I have
Like Google's basically its training data. Like that's kind of in a sense where
but not just your own site ranking in Google. Let's say that you're selling, I got a little microphone right here. What's the best microphone for podcasting? What if, say, 6 or 7 of the top 20 sites for that search results in Google What if they all said that your brand's podcasting mic was the best? And not just that, but you said it in a very specific way to work with the language models. You gave the best use cases. You said why it's the best, what it's not the best fit for. Like, kind of be open and honest about that thing. But seven of the top 20 results said that your product was the best. What do you think ChatGPT is going to say is the best mic is? They're going to say yours. So how do you do that? Is you create that. This is why, like I say, I can kind of talk openly about it, because for, like, I'm gonna call them normies in the space, you can't replicate that. But if you have access to a bunch of different sites that you can post, say, like, top 10 lists and like reviews and stuff like that, you can put that on there and you can rank those in Google. You can now basically control what AI spit out. It's not that simple. There's a lot more to it than that, but that's like the basic explanation.
Yeah, so it's basically like you're manufacturing your choice award, and then that's how ChatGPT ranks. It's like it's more so a surveying these sites, and then you're assigning yourself the winner,
That's so much
not
authority that you get. Like I'm sure you're familiar with Ty Lopez coming from an internet marketing background, but he always says now he's like, yeah, I'm the best advertiser on the planet. You can ask ChatGPT, and it's like if you search in ChatGPT, it'll say he's a top 3 advertiser, and so it's similar thing with whatever product you're selling. If you're searching for what's the best in this whatever product category, and it's coming up in ChatGPT, that's like instant authority, social proof, etc., to a level that normal Google search results I don't think have. So that's pretty cool.
are
That's
you
awesome that you
are
guys have.
are you buying these sites? Do you like are you running the sites yourself?
No,
Is
for
it
the for
are
the most part. We've got a few, that we kinda own. 'Cause, I mean, I have just a bunch of sites from being around for a long time, but, uh, you make relationships with people. Sometimes you have sponsored posts and stuff like that. You just kinda, like, you just figure out ways to get posts on these sites, whether it's a trade, whether it's a pay, whether it's a relationship, like, whatever. Kinda get that up there. And as a huge bonus, like, again, if you're ranking a handful of sites in the top 10 or 20, they're also gonna send actual traffic from Google, right? It's not just the LLMs, and you're also getting the backlinks from them. So it's just like the perfect storm of awesomeness for it, and it's been a lot of fun to do this. And again, you gotta kinda construct this a very specific way, because the language models are a little bit different in how they're interpreting the data than Google, but, that's like the 80/20 of it, and it works.
Well, I think oh, sorry. No, I was just gonna say, like, I think this is such an important concept because with AI, everyone's talking about AI like replacing and taking jobs and killing businesses and all this stuff. But clearly, like, where you could make the argument that, some people, if they don't have a deep understanding of SEO, I'm sure people are saying, oh, ChatGPT is gonna kill SEO and Google results and all this stuff. But this is a perfect example of you just adapting and always innovating. So it's like how I think like in the age of AI where people are saying lots of businesses are going to die and jobs are going to be replaced. I more so am of the opinion that it's going to be the people that are able to use AI. And I think a lot of people are of this opinion as well, but that's a perfect example of you're just adapting, traditional SEO to kill two birds with one stone, rank on Google and then also rank on ChatGPT. Like I just think that's such a key concept. And how are you applying that to like these more boring businesses where is there any specific stories or examples you can give where you're adapting AI to dramatically, adapt with the times and improve these businesses?
are you SEO hacking plumber near me with LLMs?
Uh, I'll say that for the most part, AI is playing less of a role in, like, local businesses, right now. It's still Google is the big winner. Um, but the good thing is, like, these are way less competition. A local search query is probably not near as difficult as, like, the national stuff that we're used to dealing with. So that's nice. I feel like the AI optimization for, like, smaller local businesses are probably more future proofing. I mean, think of your own usage. Probably you're not searching local queries as much. I'm not, but it'll come. It'll come. Um,
Are you using AI in other like aspects of the business, like outside of SEO, like for operations or, just workflows in general of these?
we use it for a ton of different things, really. Kind of like intro reviews to deals, see if there's anything like crazy. Like, is it worth looking through? Content creation, content editing, all the usual stuff. Nothing crazy. We're not doing anything crazy with it yet. Maybe we get there. I don't know, but not yet.
Is the AI SEO the one thing? I'm assuming you picked SEO because it's your background, but is that where you decided as in the I can't believe no one's looking at this and focusing on this? Is that how you're thinking about it?
Yeah, like people are starting to do this already, um, but I kind of think if you look at my top skill sets, historically, it's kind of been like sniffing out new opportunities is basically it. That and kind of I think being sensible and like not drinking the Kool-Aid when a narrative is given to me. I kind of like think through it. But so we're probably more at the forefront of this, but there's definitely other people already doing this AEO, GEO, whatever you want to call it.
Awesome. I'd love to kind of pivot and chat about some war stories. I know you said over 50 venture investments and you've invested in a ton of different asset classes. Do you have any like stories you can share where you made a bad investment or bought a bad deal or just made a mistake even when bootstrapping? Like I'd love to, talk about some failures.
We could spend all day here. Uh, so high level venture, we'll start with that one. Um, I actually Jason Calacanis, J Cal, he wrote the Angel book, the Angel Investing book, and it was better than I expected. I thought it'd just be like a promotional piece, and it had a lot of value there. I think the part he says about starting off angel investing is probably the best advice. Uh, it is go to AngelList, sign up, put the minimum you can into like 5 or 10 different deals. And the minimum's I think like 1,000 on AngelList, and then wait because you don't know what you don't know. And if you start writing big checks out of the gate, you're probably going to make stupid bets, which is what I did. Like venture is so much different than like these SMBs, what I'm investing in now. Um, if you try and go to venture like things that are like hard to kill, which is more in my nature, by the way, like, oh, well, I can see how that would, I can see how that'll work. Like that makes way more sense. The chances of that working are pretty good. In venture, that's almost like a recipe to like not do well. Um, I think if something's not going to like be a complete, you know, game changer to the world, it's probably not worth investing in venture. So that's kind of what I went through there. Again, like my first several bets in venture were not great, and who knows about the rest of them. Venture's so illiquid; it takes so long. Um, on paper, my venture portfolio is good, but like, who knows? And who knows when I get to even see any of that? So, I kind of wrote that off for the most part. I'll occasionally make a little one if it's maybe a friend who I really want to back, or if I think it is like a complete game changer of a company. Maybe I'll write a little venture check, but for the most part, no. And stop me at any time. Real estate, I was an LP in several real estate deals and eventually kind of realized I'm the sucker. Like I don't, I just don't know. I just don't understand the asset class enough to feel comfortable like diligencing and writing these checks and stuff like that. Where in like small businesses, like I kind of understand those a lot more. So I moved away from that. Crypto, I was very active in crypto for a while, specifically like DeFi summer and stuff like that. All the like yield farming and all this crazy things, and that was a ton of fun. But I kind of just lost interest. Called the market top like publicly then in a blog post, and then kind of just moved on. And it's
Did you buy an NFT?
yeah, I had a couple crypto punks in the day.
No way.
Yeah, yeah.
What are those at now?
I don't even know right now. I don't even know right now. I don't think they're dead. I don't think they're super alive. They're just like, I don't know, maybe they're like 100K each right now. I don't know if you can hear my dog losing her mind in the background. I hope not.
That's fine. It's your crypto punks yelling at you for speaking mad about them.
Yeah, I think probably like the delivery man's here or something. But yeah, so crypto was cool. It was great. My dopamine receptors were completely fried. I also like never really drank the Kool-Aid and believed it. I was just kind of like, this is an opportunity. I can see the opportunity. Let's yield farm like crazy and do that thing. It it was very profitable for me. It was very good, but also I couldn't focus on other parts of my business that I found more fulfilling and probably long term were more profitable. Even the short term was great. Um, so I eventually moved on, and also thought it just kind of like lost a lot of its fun and interest. In like 2020, you saw these like new DeFi protocols that were kind of like reinventing finance in a way, and there was like a possibility that they would actually achieve it. And where now it's more like meme coins, right? It's just like let's just pump stuff, and that
Yeah. Trump coin, John Jones coin.
That stuff's crazy to me. I've got some buddies who've like definitely made some questionable, you could say, meme coin investments, and they're like, "Oh, dude, it's like pumping." I'm like, that's crazy. I can't really wrap my mind around it, the meme coin stuff, but I've heard people that
I'm
have
too
killed
mid
it.
IQ. I'm too like that the meme. Like I'm too much of the mid IQ guy. Like how does this work? Like,
Right. The bell curve, that's a great meme. That's hilarious. Alright, so are there any, like, key lessons or anything from some of these failures, the bad investments or, not I don't wanna say bad investments, but, early stage, you've never done venture before, you just made bigger bets on different companies than you should have. Were there any, like, core, I guess you could say, lessons that you now, you know, have really impacted you in your investment process and thesis, today?
stay in your lane a lot more. A circle of competence is probably the biggest one. Um, that was like really clear in like real estate, which maybe had like I think one deal die or something like that. So it's not been the end of the world. It's still been okay. But also real estate's not really priced in a way you can have failures. The return profile is not that. Where with other asset classes, you can. Like even the small business space, like, for every 10 deals we look at, one might fail. Let me rephrase that. 10 deals we do, like on average, one might fail. That wouldn't be unheard of. But the returns that you get, targeting 30% IRR, more than compensates for that. Whereas real estate, if you're looking at like a 10% IRR, like the math doesn't work out. If one deal dies, it wipes out your returns for all that stuff. And that, so I'm, just like stay in my lane with that. Um, the venture, again, not as much. Like I think the moonshots makes way more sense if you're going to play that game. Uh, Probably makes sense. I don't know. I like the angel list access fund a lot. If I was going to do venture again, I would treat it as like less of a moonshot bet and more as like an asset class that I want a percentage of my wealth tied into. I think the angel list access fund, which gives you, I don't know, access to like, we'll say like 100 different bets through angel list or something like that. Small, like that probably makes more sense. Maybe you'll get a 3 extra money in 12 years or something like that. So that's probably how I would approach it.
Gotcha. Gotcha. All right, I got an interesting question for you. So we were talking in the beginning about, when you started, you didn't know anything about the acquisition space or raising money, and you're like, they probably shouldn't have given me money at this time. And I think it's very similar for a lot of newer entrepreneurs. But if you could go back in time, knowing what you know now, how would you start? Would you start with acquisitions? Would you bootstrap? Like, I would just love to hear your thought process on if you could start completely from scratch, like, what would you do?
All right. So I've been in the game a long time. And started just bootstrapping, like living in my dad's basement, bartending and playing poker to fund it, like that type of thing. Uh, I think it's probably like it's the best way. Certain people's backgrounds would be better for them to step in a little bit bigger out of the gate. My background was not for that. And so I needed to do everything the hard way. And I think it made me a stronger, better entrepreneur from that. Like all the little stuff I had to do myself. And it really like, builds up the skill sets with that. So I would not start with acquisitions. Absolutely not. I wouldn't know enough. I probably would have got my ass handed to me if I had done that. Yeah, I would have just ground it out bootstrap way, and it's probably easier than ever to bootstrap. Maybe the competition's a little bit harder, maybe, but I don't know. You can vibe code, you can build stuff up. It doesn't cost as much money. The tech's so much better and easier to get going. So yeah, I wouldn't change much.
Have you vibe coded yet? Have you messed with that at all?
No, but because I have relationships and resources, I can get other people to do it. um,
I think you're gonna say relationships is that I actually have a life, son.
Well,
I'm
no,
not
no, not
locked
that
in
the
my room.
relationships with
Vibe
others. So,
coding.
like, one of our Capital Pad co-founders, he's the technical CTO. He was my co-founder for a SaaS company I had like a decade ago, and we've remained really close. And we had a really good exit with that. And so when I hit him up, he's like, "Yeah, let's do something." And so like, I don't have to figure this out. I can just like talk to him, and he's like one of these god tier developers, and he just like next morning, like, here's this thing you ask about. I'm like, how did you do that in like 8 hours? But like, yeah, so that's why I don't really have to figure it out yet. I keep meaning to. I've got all the links from Twitter and resources saved. Like, oh yeah, I'm gonna like spend a weekend and do this. I just haven't.
Yeah. Who are you following on there? I'm always you always know someone by their timeline. You always depend depending on what you find. Are you into a bunch of AI niches right now? Are you into like you told me you avoid politics, which is I think wise, especially right now. But
People complain about X, I guess not Twitter, X now, all the time, and I have a pretty good experience because I'm very aggressive in like muting and pressing not interested on posts that it feeds me that aren't the type of things that I want. I block pretty aggressively keywords that I don't want to see anything related to. Politics on both sides of the aisle. Like I just I come here for like business and maybe some like personal enjoyment there, but mostly just like business stuff on there. So I'm following everything from AI people to SMB people, a lot of like bigger investors, a few SEOs in there. So I'm all over the place.
That's cool. I want to go back to that same question and clip farm a little bit because I want to hear a deeper answer. So we've decided on bootstrapping in 2025. What would you what business would you build if you're bootstrapping started from scratch? What industry? How would you build it? If you had to write it out on a napkin and give me the playbook, what would you do?
I don't know, guys. I mean, I would love to have a great answer, but what would I personally do?
Yeah, based on all your experience, all the years, if you had to start from scratch, bootstrapping, where are you going with it?
Uh, so I will say if I was young and hungry now, I probably would have obsessed over the TikTok algorithm already. Um, I think people are printing with TikTok stores and stuff like that. It's a low entry point. You don't need a lot of capital to get going. Um, I didn't have any interest in that. I think the TikTok algorithm's way too good that it's unhealthy for me.
it's it's scary, dude. It's scary.
So that is one I would probably do. Yeah, I don't know. I'm actually still really interested in the AI SEO type stuff. I think that's going to have legs for a really long time, and that fits on my brain works, like hacking these little systems, stuff like that. Like I just really enjoy it. I can just deep dive into that and go for a really long time without coming up for air. So that's what I would do personally, but you know, it really depends on the person. Like I would never recommend an individual like, "Oh, go build this business. It's a good opportunity." Like it has to be very much like founder fit to the business, not just is it a good opportunity type thing.
Right. You gotta have like the intersection of like your curiosity and some sort of an edge, like you said. It's right in your wheelhouse to go do AI SEO.
What do those viral videos say? The ikigai or something? Have you heard of that term?
Yeah, I know what you're talking about. Yeah, I mean, I think if when you're a founder starting, you ha- you have to obsess over stuff. You have to be completely obsessive over it. You have to obsess. Ooh, that was loud. You have to obsess more than any of your competitors, than anyone else. And I think if you do that, you can really have a lot of advantages. And if you don't do that, you're going to lose. And so find something that you can obsess over. And it can be the weirdest industry, the weirdest niche. But you see people just print money because the internet has allowed all these little weird sub niches to like come together. Like maybe you're into, I don't know, like cat themed board games. Like I don't know. Like you can probably find a lot of other people into that somewhere. And if you become the expert talking about it and doing all this and offering value for that more than anyone else, well, you can probably find your people and make a living off of that, right? The thousand true fans thing. Uh, so find what that is for you. Doesn't matter what it is, and all these new tools and resources and hacks and AI, like all this just enables that a lot more. But you got to start with what you're obsessed with. The other side of that is that if your obsession is making money, then you can just find the opportunities and outwork other people to make that money. It doesn't have to be something you're super interested in, as long as you're really interested in the game of making money. Um, and so for me, it's not like I was really interested in one specific thing. I was interested in the game of beating the games, right? Of beating the systems. And a lot of that was around money. So kind of gotta like choose your path there, but something you can obsess over for sure. If you can't obsess over it, you should never be a founder. My God, go get a job.
I think that is a I think that is a beautiful right off in the sunset quote right there. Yeah. Travis, I want to be respectful of your time, but today has been a blast, and I appreciate your insights and sharing the story and insights. Is such a weird word, but I appreciate you sharing your wisdom and your scars with us, and actually not holding back on the things you're working on. If someone is interested in learning more about Capital Pad and you yourself, where can they find you? How can they reach out?
You can stalk me. So CapitalPad, capitalpad.com. And to be very clear, for investors, it's only for accredited investors. If you're looking to invest, if you have a deal, please just come and pitch us with it. For the SEO stuff, smashdigital.com, or you can just follow me. Find me, Travis Jameson with an I. And I'm on Twitter, Travis_Jameson, or Travis.vc is my personal site that I rarely update.
Thank you so much, Travis. That was a blast. Appreciate you
Guys,
coming
it's
on.
been a pleasure. This was a lot of fun. You asked good questions. I appreciate it.